Hi, Else here. Just what are the different types of business entities and exactly what are the pros and cons of each? The three most common forms of business organizations are proprietorship, partnership, and corporation. Many businesses start off as a proprietorship or partnership, and as they grow, they may choose to become a corporation because of the benefits of the corporate structure. Proprietorship is a business owned by one person. There are many benefits of the proprietorship form of business. It's simple to set up, costing between $60 and $100 to register provincially. You can start with very little money. I started my own business with less than $5,000 of personal savings and no debt. The owner has full control over the business. They make all the decisions in answer to no one but themselves and their customers. And their creditors if they happen to borrow money. There are also drawbacks to a proprietorship. When the owner dies, often so does the business. Any profits from the business are reported on the owner's personal income tax return, and they're taxed at personal income tax rates, which are often high. Finally, the owner has unlimited liability. What does that mean? It means that the company and the owner are not legally separate. If a customer, supplier, or creditor sues the company, the owner is being sued personally. If the company has debts, they're considered the personal debts of the owner. The owner can lose everything owned by the business, but also all of their own personal assets, including their house, car, and personal savings. Unlimited liability means that a proprietorship is not a separate legal entity from the owner, but the accounting records of the business are totally separate from the personal records of the owner. What does that mean? Well, if the owner of a business has a car for personal use, that car will never show up on the business's financial records. Proprietorships are the most common form of business organization. Every 2 years, there's approximately 500,000 new startups in Canada. Many of the businesses you see every day are proprietorships. A partnership is an unincorporated business owned by multiple people. The advantages are very similar to the proprietorship form of business organization. An additional advantage is that there may be more startup capital available. That's because each partner brings their own cash to the partnership. In a partnership, the partners share in all the decisions and profits based on the partnership agreement. Partnerships have similar disadvantages to a proprietorship. One serious additional disadvantage is that the debts of one partner are also the debts of the other partners, even if the other partners didn't know about the debt to begin with. Similar to proprietorship, although the business is not a separate legal entity, the personal assets and obligations of the partners are never reported on the partnership's financial records. Personal and business records are kept totally separate. Partnerships are another common form of business organization, particularly for service businesses, kind of like accountants. Partnerships can grow to be very large. For instance, the accounting firm KPMG is a partnership and it's globally recognized. Corporations are businesses that are incorporated under either provincial or federal law. They are owned by shareholders. There are many benefits to being a corporation. The main benefit is that the corporation is a separate legal entity. They file their own tax return and they can be sued. This means that the owners have limited liability. They can only lose whatever they spent on their shares, never their personal assets. Because ownership is separate from the business of a corporation, the life of a corporation can go on forever. This is because transferring ownership means selling the shares to another owner. This also makes it much easier for a corporation to raise money. They can simply sell shares on the stock market. Finally, a corporation pays corporate tax rates, which are often significantly lower than the personal tax rates paid by proprietorships and partnerships. There are also disadvantages to corporations. They're complicated and more expensive to set up and maintain. There are many regulatory filings to consider. Finally, if you own a share in a corporation, you don't make the decisions and you don't get all the profits like in a proprietorship or partnership. Ownership and control are totally separate in a corporation. The board of directors and management run the corporation and make the decisions. The shareholders are totally separate from the running of the company. There are two types of corporations, public and private. Public corporations are ones like Canadian Tire. Private corporations are ones like McCain Foods. Public corporations sell their shares on the stock exchange like the TSX, the Toronto Stock Exchange. Their financial statements are available to everyone. They're published on the web, and there can be thousands or even hundreds of thousands of shareholders. This means that anyone can own shares in something like Bank of Montreal or Royal Bank. Since you can invest a small amount of money, your risk of loss is low. There are over 4,500 public companies in Canada today. Private corporations can be very large, such as McCain's Foods, or they can be very small. private corporations do not have their shares available to the public. Because of this, they often have a hard time raising capital to expand their business. A private corporation's financial statements are never made public. You, as an individual, will never be able to see the financial statements of McCain Foods. There are over 2 million private corporations in Canada, and they can be very large or very small, with many private shareholders or as few as 1 or 2 shareholders. So, let's check out how well you understood the different forms of business organizations. Remember to pause the video and come up with your own answer first. The majority of restaurants in your neighborhood are most likely to be. Actually, a restaurant can be any type of business. Chains like McDonald's are corporations, but some are partnerships and other proprietorships. For instance, the Thai restaurant around the corner from me is a proprietorship, and the fish and chip place, it's a partnership.
So, we've already covered all the different business organizations. Students at this point are often clear about what kinds of businesses would choose to be a proprietorship or a public corporation, but not so clear about the choice between the partnership and a private corporation. Why would a company choose to be a partnership when a private corporation would mean they have limited liability? To better understand this, let's review why we incorporate. 1 is the lower taxes that corporations pay. 2 is the limited liability. The shareholders' personal assets are protected because the company is a separate legal entity. 3 is the income splitting. If I want some of my family or friends or extended family to share in the profits of the company, it's much easier to do in a private corporation. Are there any drawbacks to a private corporation? Absolutely. A private corporation is a separate legal entity, and it has ownership rights. As a shareholder, you actually don't own anything directly, except for your shares. The corporation owns everything. You don't. Even if you're the president and you own 100% of the corporation's shares, you're an employee and a shareholder, but nothing else. Now, let's look at what's good about a partnership. 1 is you might not be able to afford to set up a corporation. Partnerships are relatively cheap to set up and administer. Sometimes it's just a simple partnership agreement. 2 is tax reasons. Yes, corporations do have lower tax rates, but you might set up a partnership first because any losses from a partnership are reported as business income on your personal income tax return. If you have losses from an early startup, they can be placed against other income that you earn, say from a full-time job while you run this partnership part-time. 3 is that a partnership is much easier to dissolve. If you plan to run a business for only a period of time, it's much easier to break down a partnership than it is to break down a private corporation. Are there any businesses who are set up as a partnership because they can't become a private corporation? Actually, pretty well anyone can set up a private corporation. In Canada, not only can businesses become private corporations, but so can dentists, lawyers, doctors, or accountants. Limited liability, tax benefits, and income sharing might make it the right way to go, even though it is more complex than a partnership would be. So, which is better, a partnership or a corporation? Well, each situation is unique, so we can't say which would be the best. The choice between a partnership or a corporation depends on many things. You have to analyze the business itself and decide. For instance, would liability be an issue for the company, or is tax minimization important? As an example, say a company sells mining equipment. If there's an accident due to their equipment malfunctioning, a lot of people might get hurt. A private corporation might be the way to go. What about a doctor? The tax benefits available to a private corporation might make it a good idea for the doctor to incorporate, even with the higher costs of incorporation. For instance, a doctor who makes $200,000 a year can pay significantly less taxes if they incorporate as a private corporation in Ontario. Note: incorporation doesn't provide a doctor with protection from losses due to professional negligence. So, which would be best, partnership or corporation? There are over 2 million private corporations in Canada, and we don't even know how many partnerships there are because it can't be tracked. There's probably hundreds of thousands. Individuals who are choosing between a private corporation and a partnership must look at the pros and cons of each, and given their individual circumstances, decide which works for them.
Corporations will be the focus of this course. Does that mean that an accounting course that covers corporations is useless for anyone else? who wants to start their own proprietorship or partnership? Absolutely not. Remember that the accounting records of any business must be kept separate from the owners, regardless of the form of the business. Accounting for any type of business is basically the same, so the content of this course is applicable to anyone who is interested in learning about accounting, regardless of the form of business. This will help you to make decisions either for your own business or the business you work for in the future. So, why is it important to learn about the different types of business organizations? Because you may one day be one of the 250,000 individuals who start their own business every year. Knowing the different types of business organizations out there, their advantages and disadvantages, can help you to make an informed decision in the future. In the next series of videos, we'll be covering the different types of business activities.